Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, it is Jobs Day. Just to briefly recap, sorry no evening recap last night. Had some computer issues I had to work through to make sure I was ready to go for this morning. So that'll be back Sunday night. I'll be back with an evening recap. So, okay, 15-minute chart. So basically the way things played out in the end, leading up to the jobs report, is we did the big pop and the big drop, which we talked about yesterday. And then this bar right here is the China news. And I think the China news, whether it's fiction or reality, I never believe any of the numbers I get over there. You know, reality, fiction, something in between. What it did was give the all clear to be able to go ahead and move off of the bend level, the level that gets created when we do the jobs report, and start to walk it up into non-farm payrolls. And that's what's happened. That's what's happened. And you know, as we go out in the daily chart, anybody that's been following the webcast for any period of time knows that uptrend, 1340 quarter, new highs, 38% retracement, back up to test those, then we make new highs, and it's like I was saying, why would we just go back down after all that? The reason you have fib levels on your charts is so you can make gigantic 38% retracements and go up and make new highs, which is what we've done. Now, everybody, a lot of people have been pointing to 1700 to 1703. Well, we're here. Does that mean we're done? I don't think we're done, and I'll tell you why. The bands are still rolling. There hasn't been a single exhaustion top in this market for the last 18 months. And exhaustion top is right here. Riding. Can't ride anymore. Roll, and we go. But the problem with that was we couldn't take out 1670. Tried it again. It held. That created a floor, and now we've gone up another 33 handles. So I believe that we need to punch the upper band with some authority, and at that point we can start our next retracement. But you cannot complain. You can't complain. Well, maybe you can today. But overall, you can't say that we've gone straight up off of 1553 because we haven't. And again, anybody that's been following the webcast for a while, I apologize. Yeah, we're going to do it again. We go up, we shelf for 5 days. We go up, we shelf, up, shelf to kind of a pullback, and now we're up. Okay? So this could definitely be the start of something larger, but all that depends on what happens at 8:30. I will give you my monthly speech. You are not a hedge fund. You are not a gigantic bank, and you do not push around billions of dollars of shares. If you do that and you're listening to this webcast, welcome. Don't game jobs. Don't game jobs. You don't know what those guys are going to do with it. It could be positive news with a negative reaction, negative news, negative reaction. Positive news, positive reaction. Positive news, negative news, positive reaction. There's 4 different ways it can go, and you don't know which one of the 4 there is. So rather than sit at your desk and play 4-card monte, let a range be created. What we'll be doing in the room is we'll have a range that's created. I have levels that are based on that, and we trade off those levels. We get a support, we get a resistance, then we have something to lean on, and we go with it. So don't just dive in. Because, yes, we've done 1703.75. Sell the news as a tempting reaction. And maybe that's what happens today. But they could just as easily ramp it and ride the band. So while we're up, it's not like it's coming on this bar where we've done up day, up, up, up. It's like, whoa, how much farther can we go? And even then, all we did was shelf, right? We're in a very strong market. Very strong market. and you got to respect that. Don't fight, don't. I mean, there's times to fight it, and a good time to fight it is if we punch this upper band. Okay. Um, so as far as pivots, those came out in a separate um, post today. You get the daily pivot at 97, 3-dayer 94.5, 9-dayer 92.25. If the jobs report pulls back, I'm looking at the 9-day pivot. The 92.25 is a support area with 88 underneath that, and then 85.25. If we pop, I'm looking at 1714 to 1717 on an upper band punch. I think if we do that right off the bat, I think that's absolutely a fade. Absolutely a fade. Back to inside the bands. Okay. My 45-day pivot today comes in at 1653.17. So we are about 50 handles above that, which is, stretched. 60 is overbought, 70 is crazy town. Where's crazy town? Third standard deviation band. We hit this today, we hit this little gray band today. I'm selling with both fists. Okay? That's the outlier scenario. But before you discount it, it's only 23 handles away. I mean, we've done days like that before, but they're usually down days. The big candle days are down days. Will we pull back? Absolutely. Are we going to pull back at 831? I don't know, and neither do you. So don't pretend like you do and put a bunch of contracts on before the jobs report. Okay, everybody have an amazing day, amazing weekend. Mike Vacchi, PrincetonTrader.com. Check out the website. Check out the chat room. I'll be back Monday morning with another webcast. Trade them well.